Imagine this. You're strolling down Collins Street in Melbourne on a scorching January day, iced coffee in your hand, and your phone buzzes with a crypto alert. Bitcoin is dipping below key levels amid global chaos. Is this the pullback we've been waiting for, or just another bump in the bull run? That's the question on every Aussie's mind right now. Welcome to CRYPTOLOGIC, where we cut through the noise on Bitcoin, blockchain, and all things crypto. I'm Sash, your Melbourne-based guide to this wild world. First off, let's check the pulse of the market. As of right now, Bitcoin is trading at $135,011 Australian or $90,831 US. That's down about 2.3% in the last 24 hours, but still up 7% year to date after a brief rally to nearly $139,223 Australian or $93,300 US dollars earlier this week. This segment is brought to you by CRYPTOLOGIC.com.au, your go-to hub for in-depth Aussie and global crypto news. Head over there for exclusive articles on local regulations and market insights tailored for us down under. Now, let's dive into the local scene here in Australia. Things are moving fast, especially with our government's push towards clearer crypto rules. Over the next 18 months, we're expecting the rollout of a comprehensive digital asset platform framework. This could be a game changer for Aussie investors, making it easier to trade without the regulatory grey areas we've dealt with for many years. Imagine seamless compliance for exchanges and better protection against scams. In about time we've caught up to spots like the UAE. But the big local buzz this week? Binance. Binance Australia has finally restored direct bank transfers after a 2-year freeze. That's right. Verified users can now deposit and withdraw Australian dollars using Pay AUD and standard transfers, thanks to a new partnership with Bolt Financial Group. This ends the headache of using third-party payment methods, which often came with extra fees and delays. For Melbourne and traders like me, this means quicker access to liquidity, especially during volatile swings. Remember the 2023 debanking saga? Banks pulling away from crypto left exchanges scrambling. Binance's comeback signals confidence returning to the Aussie market, potentially boosting adoption among everyday investors. On the flip side, we've got ongoing discussions around institutional inflows. JP Morgan predicts crypto capital could accelerate in 2026, with Aussies potentially seeing more super funds dipping into Bitcoin ETFs. But let's not get ahead. Our local exchanges like Independent Reserve are already reporting steady growth, with BTC volumes hitting new highs this month. Shifting gears to global news, because what happens overseas ripples straight to our shores. First up, the US Senate Banking Committee just postponed a key markup on the Digital Asset Market Clarity Act. This bill was set to define digital assets as either ancillary, like securities, or network tokens, commodities, paving the way for clearer rules on everything from stablecoins to DeFi. The delay? Bipartisan wrangling and pushback from big players like Coinbase. Chairman Tim Scott says everyone's still at the table, but this stall could mean 2 more years of uncertainty. For global markets, that's a red flag. The US risks falling behind if they don't lead on regulation. Second, Bitcoin's price action is getting hammered by geopolitical tensions. President Trump's latest tariff threats on 8 European countries tied to his wild Greenland bid have sent risk assets tumbling. BTC dropped as much as 3.6% to below 137 Australian dollars, that's 92 US dollars, with Ether sliding even harder at 4.9%. This comes after a rally to just shy of 145,000 Australian dollars or 98 US dollars, 98,000 US dollars midweek, fueled by strong ETF inflows. Analysts are warning of more volatility if these trade wars escalate. Third, the whale watchers are buzzing. A Bitcoin wallet dormant for 13 years just moved 909 Bitcoins worth about 126 million Australian dollars or 85 million US dollars to a new address. That's not all. Another one, after 12 years, shifted a similar fortune. These Asian holders waking up often signal big market shifts, whether they're cashing out or repositioning for the next leg up. On-chain data shows this could be the part of a broader trend of long-term holders taking profits amid the rally. Now, for an in-depth market analysis, Bitcoin's kicked off 2026 with a bang. It's getting a bit hot in here, with breaking past last year's lows and hitting 139,000 Australian dollars or 93,300 US dollars briefly. But the 4-year halving cycle might be evolving thanks to institutional ETFs. We're seeing more structural shifts. Standard Chartered's Jeff Kendrick predicts BTC could hit 225,000 Australian dollars or 150 US dollars, 150,000 US dollars by year end. A 55% jump from here, driven by regulatory clarity and adoption. However, risks loom. Tariff fears could push us below 120, or that's 120 Australian dollars or 80,000 US dollars with a 30% probability per options data. Looking at macros, global liquidity is supportive, but Ainslie Crypto's January update warns of near-term caution due to overbought signals. On-chain metrics show institutional accumulation, with inflows hitting 130 billion US dollars last year. Expect more in 2026. Ethereum's just nailed its BPO hard work, maturing layer 2 solutions, which could boost altcoin plays. For Aussies, keep an eye on our dollar's strength. If the Australian dollar weakens, BTC in local terms could look even better. And hey, after all, this heavy lifting, let's lighten it up a little bit. Why did the Bitcoin whale finally wake up after 13 years? Because it heard the market was making waves again and didn't want to slip through another bull run. Talk about FOMO from the deep. Okay, I know. Don't have to say it. Just go easy on me. But let's get into the CRYPTOLOGIC takeaway. Look, amidst the regulatory delays and price swings, one thing's clear: crypto is maturing, but volatility is here to stay. Institutions are piling in, and Australia is positioning itself well with banking comebacks like Binance's. My expert opinion: diversify. Focus on blue chips like BTC and watch those whales move for clues. But remember, I am not a financial advisor. Always Dior and consider your risk tolerance. For 2026, I'm bullish long term, but brace for short-term dips from global events. If this got your gears turning, smash that like button, subscribe for more, and drop a comment. What's your 2026 BTC price prediction in Australian dollars? Check out cryptologic.com.au for deeper dives and follow me on YouTube at cryptologic-ss for real-time updates. Thanks for tuning in. This is Sash from CryptoLogic signing off. Stay cryptological.